Good morning, everyone. Welcome to the live session. Yeah, I don't know what's going on. Audio, everybody should be able to hear me. Like the mic is moving, like it's working. Good morning. Let me type in the chat. How's everybody ready to make some money? Let's make some money. All right. I don't know why I keep saying check my audio settings, but the audio is fine. The audio is fine. It is not giving me any issues. Speakers. This should not be in the speakers. Let me remove this. Primary speaker is I don't know why it doesn't have that. Why it has my microphone as one of the speakers is weird, but that's okay. We ain't gonna worry about that. Let's get it. Let's get to the charts. Let's see what the market is giving us this morning. Gap up. The market's gapped up crazy yesterday. So we want to double check and make sure we're not going to refill that gap today, which I believe we probably will refill it back to the downside before we continue to take off. Even though everything seems to be going a little bullish in the Iran situation, don't want to get too ahead of ourselves and start buying and expecting us to retest all-time highs again this early. All right, so let's look at the chart and see what we're going to find. Oh, wait, can I hide the camera? So I gotta move it up? Okay, I guess I'll do it that way. Alright, so SPY opened up this morning looking a little bearish. I think that is fitting to refill the gap back down to the downside that we're gonna see. Let me pull up the daily so you can see the gap I'm talking about. Talking about this little gap right here. You guys should see this right here. We want to refill that back to the downside. We want to clear this before we clear for takeoff. Because if we don't clear this and we start taking off some more, we have a good chance that we're going to have to come back down and refill this gap before we really clear to start pushing and retesting the highs again. I don't really want to take off before we retest this gap. I'd rather retest this and then take off. As you see in the gap down, we had a similar thing happen. We had a gap down back here when the market was pulling back. And as it was pulling back, you see as we get overextended past that gap, it had to come back to refill it. And it came back yesterday on that massive push we got and refilled that gap down that we had going on. Let me make sure I go live on the Discord for the people. Oh, did I go live? Yeah, it should be live. Should be live. Okay, yeah, we're live in the Discord. So we're gonna go to the 15-minute chart. What we see happening here is a choppy morning 222 reversals with high wicks showing high resistance up here at whatever level is this? We'll say at the top of this candlestick, 655.26. All right. So what I would do is I'm looking at puts right now because of how we broke on the opening range. It broke bearish, even though it's trying to fight and go bullish right now. We broke bearish, so I want to give it till about 10:30, 10:45 to see if we could come down below the 652.90 level, or we break above the 655.20 level first. Whichever one happens first is going to it's below here, then we know we're going to look for our target down here at 651.53. All right. entered the put based on this opening range breaking down, but as you see, it's starting to bounce back up. We're not going to get shaken out of our position unless it is validated by a level. Okay, you always want to validate your moves with a level. You don't want to just be trading based off of emotion and how you feel about the stock at the moment. A lot of the times that'll make you miss out on crucial rejections, and all along you were right about something going. Like right now we're saying it's going to the downside. If we fold on our position before we get a push above or close above 655.26, then it could reject and come all the way back down. Then we're going to be like, oh man, we gave up. We just left profit on the table. We just took a loss for no reason. So that's why you want to make sure you want to have your levels set, and make sure that level is not so far in a way that 70% loss when it hits your stop loss. You want to make sure that stop loss is in a range where you're going to only take about like a 20% loss. You don't want to be sitting in there taking 40, 50, 60% losses on these small trades, okay? So make sure we are locking in and taking our profits when we get them and not being greedy. Stopping the losses at reasonable places. Don't let your losses run past 50%. You need 100% gain to get a 50% loss back, all right? So you don't want to do that. You don't want to do that to yourself. Let's get back on the charts real quick, see what's going on. I want to glance through. I want to see what they're talking about on CNBC this morning. It's always good to see what the news is saying. Trump says Iran president asks for ceasefire, but U.S. wants Hormuz Strait open first. All right, so we're getting closer and closer, it seems like, to the conclusion of this war situation. But there's still threats being passed back and forth, like Iran threatening NVIDIA, Apple, and other tech giants with attacks, saying they're going to attack some of their facilities out there that are located in the reachable regions of the Middle East. So we got to keep an eye out for that going down. We don't want to fake ceasefire or unagreed upon a ceasefire agreement and then war pull out irregardless. Like he's thinking about either bombing them to hell and then trying to pull out, or reaching some kind of agreement for them to open up the strait. He's putting a lot of and protect and go get their own oil, essentially, which is funny to me. Which is, honestly, I don't blame him for doing that. That's not something Hormuz. Then you should be on you to make sure that that vessel or that channel is being protected and is open for your oil to come through. That should not fall on America. But the whole closure of the strait did occur because of our invasion of the country. So it's like they're like, well, you guys are the reason why it's closed in the first place, but you're going to make us have to go in the fight to get our oil out of there. But let's see what happens with Iran when America starts to pull out. I don't know if we're going to do that in the next week. That might be like another 2-3 weeks before you start hearing that. When you know we're pulling out, when they say they're pulling those troops that we sent in, when they say those troops are being sent back home. When you hear about people who said, oh, my brother or sister or uncle got deployed, when they say they're coming back home, then you know we're really pulling back. I don't believe we're pulling back until you hear those troops come out. They put 50,000 troops on the ground. It's hard to convince me that that was done for no reason and because we're getting close to a ceasefire. It could be a flex move to, to try to intimidate Iran. But 50,000 troops, that's a lot of troops to put on the ground. That's a lot of money being spent to feed them every day, to supply all those troops daily. So that's one hell of a pump fake, or flex if it was one. And I am not sure if that's a flex or if we're doing that because we know we're really about to get deeper into this conflict. You can't take Trump at his word. So all this, I want to pull out, all this that down. So let's see how that all pans out. Let's get back to this chart and see what SPY is doing. We had some good price levels. I'm going to share. We had Microsoft calls where if it broke above 3 Let's see where Microsoft is right now. Microsoft is at 371, so it's right near the call entry level. A 370 based on gamma momentum. If it can't hold support at 370, we start breaking down back below 367, which is the call entry from my price chart, then you want to get up out of Microsoft, because we could do on a nice little dip again and start retesting this 356 area. So look for 367 to hold as support. 3 like it's trying to hold right now. And let's see what happens. What time is it? 10:20. All right, so if we're in the morning trade, the latest, because you don't want to get hit with some theta. Unless you have a longer contract. If you're playing your orb trades on longer contracts, then you don't have to worry as much. But I would still get out if that trade is by 11 o'clock. If you're doing it based off of the opening range breakout strategy, okay? Because what could happen is you'll get caught in the chop that happens usually between 11 and 12 o'clock. And then 12:30 you could get a reversal move. So 12:30, if the orb showed a breakdown at 12:30, something could happen and we'll pivot and break out to the upside. All based upon what you see. 15-minute candle puts in a 1 bar. Let's see what happens. Okay. So I like watching some in-between time frames. The 20-minute is one of my favorite to watch, the 20-minute time frame. And you got the in-between. It gives you that in-between sniper vision. You know, where people watching the 30 institutions. That so you could catch that signal early. Like right now, we see that SPY is putting in 1 bars all morning. A lot of indecision. If you went down to the 15, it would look a slightly bullish right now based on these two up bars and that failed 2 down. But if you go to the 20, like I said, that in between, you could tell that we are sitting in no man's land pretty much with these all 1 bars. 111. Someone please call 911. But this either 2 up or 2 down. What we're looking for, we're hoping for this to break down below, come down and test this 652. Actually give it 651.50 before it bounces on the day if it's going to bounce, but it looks like it's not doing that. Look like it's trying to break out right here above that level. We said we got to watch at 655, and it's about 10:22 now. So that opening range play, it pivoted on it. But that 15-minute, if you look at it, it closed as a failed 2 down, okay? I jumped in early. For that 15-minute candlestick to close to see if it closes as a bearish 2 down or if it's like a weak 2 down. If it puts in that momentum in that direction, you got to be careful. Let me show you. I don't got the chart out. I'm tripping. So this is what I'm saying. This was a failed 2 down right here. So you see this surrounded in green. This is a 2 down, a red 2, but it's outlined in green, which means that it finished in a bullish momentum. You want your 2 downs to finish in bearish momentum. A failed 2 down means it usually tried to push down here and then the buyers came in and caught it. And this is why we're getting this push up right here. But there are sellers. This lets you know that there are sellers present, but the buyers just came in and overtook them on that candlestick. So usually what you could do is if you see a confusing signal like this on the second candlestick after the orb, you could wait for that third one to see the signal. And this one gave a 2 up. So this was looking like a bullish signal came in. And we're going to base it off of this signal right here in this level. We want to see us hold below the top of this candlestick where that bullish signal came in, because I jumped into the put early. So that was a presumptuous move by me, jumping in that put as soon as we broke that 2 down. Just because I'm thinking we're going to refill that gap. But like I said, don't put your thoughts and emotions into it too much. You got to take what the market gives you. Take what the market gives, or it will take your money from you. I promise you that. So we're going to see if this rejection holds. It looks like it's holding right now. If we break down back below 653.80, that'll be very good because that'll give us a 3-bar on the 15. And it will also give us a 3-bar on the 20. If we put in a 3-bar here, that is a strong pivot back down. And then I'll be very confident that we're about to break down to our target at 651.50 after that. I still want to be out by 11 o'clock, so it's 10:24 right now. I'm not trying to stay in this trade too much longer. Let's see how it pans out, y'all. If you're in this with me or you're looking for a jump in a trade right now with me, you could grab the puts off this 655.30 rejection because I'm still playing the downside based off of gap refill needing to be done and that opening range breakout showing that it was looking slightly bearish. Even though they're trying to fake us out with this little push right here, I'm still thinking we come down and actually break below this level down here. Don't get caught in the pump fakes. And let me see what the momentum looking like. Let's go to the momentum chart. Let's see what our momentum is looking like this morning. So right now on the hourly momentum is showing that it is a little bit overbought on the RSI. This is the RSI down here. This is stochastic RSI, shorter term momentum indicator. You want to keep an eye on that. We was watching SPY though. This is the Qs. Let's go to SPY. So on the hourly is pointing downwards. We're about to get into near some oversold teller territory on the stochastic hourly. So if we do have a pullback, like I'm saying, it could be short-lived before we bounce. We could just be coming to refill that gap and then bounce because it's already leaning towards that oversold area. I don't think we're going to lean too deep into that. Let's go ahead. Let's check it on the daily. Let's see what the daily momentum is looking like. Okay, daily momentum strong. Yeah, so we could fill this gap and still bounce up and still hold strong momentum on the RSI on the daily, positive momentum. I do like how we look as far as getting out of that downtrend we've been in. You see that bounce. This 2-up was the first successful 2-up bar that SPY has put in since March 4th of 2026. This is the last successful 2-up. All these were failed 2-up bars you see right here. Failed 2-up, failed 2-up, failed 2-up. Failure, failure, failure. But this is a success right here. So we don't want to fight the trend, but you also don't want to get wrapped up in it and get too bullish, especially with the overall trend still being bearish. If you go to our weekly chart, our weekly still showing this is a 2 down. All right, it's a failed 2 down, but this is a 2 down week that we're in. So don't flip bullish on the first daily 2-up that you see. You want to get deeper confirmation before you say we're back in a bull market. Right now, we're definitely in a bear market. 1, 2, 3, 4, 5 weeks down. Definitely in the bear market right now. I would say you could consider yourself in the bear market. Once we get past 3 weeks down, that's getting bearish. And we're 5 weeks down. So after we put this candlestick closes, if we put a 2-up, a 3-bar in this week, or even a 2-up come next week, you want to see that as the beginning of the pivot. And if we put a follow-up 2-up in after that, then that is continuation. That's when you can say, all right, we definitely should be out of this bearish trend that we're in and starting to reverse. But right now, this is very, very early, which is why it's a good chance that we get those gap refills and pullbacks that I'm talking about. Macro momentum still bearish, micro momentum bullish, slightly bullish. So I like to always trend with the macro momentum. I don't like to try to go with what's happening in the micro picture. I try to trade along with what's going on in the macro momentum so we can see what's happening in the big picture. You want to be a big picture trader, not a small picture investor. And I still want you all to be more investors than traders, all right? So grow those accounts, grow those portfolios. Make sure you are investing in long-term positions. We don't want you out here trading and gambling. You got to invest for the long term, okay? You got to invest for the long term. Don't scalp and look for all your money to come from scalping or or a quick 100, 300% gains from option trades. You will get those. That will come. The market will feed you in those kind of ways, which is a blessing because it lets you know that if you're patient enough, as you're growing your account, as it grows slowly, you're going to have some rapid jumps in your portfolio because of those 300% days that you're going to get. All right. Let's get back on it. Discipline is key. Discipline is key. All the strategies, all the price levels in the world won't help you if you have no discipline. Let's get back to the chart. Let's see what's happening. I'm not going to be on here for too much longer. We're going to try to stick it through till 11. All right. This is the momentum chart we're looking at. Momentum looks pretty down. Let's look at the 5 minute. So the 5 minute is looking in the middle, a little choppy right now. We want to see a momentum breakdown at least on this 5 minute in order for us to feel comfortable about our target being reached. Is 651.53. This is what we're looking for right here. I'll put this right here so we don't get confused. Let's see if we get that today. And we want to stay below 656. Actually, what was it? No. 655.30. We want to make sure we stay below this previous candlestick's high. We don't want to keep printing 2 ups on the 15 minute. We are watching momentum like it's trying to creep to the upside on the 15, and MACD like it's about to cross over. But like I said, it's still fighting with this level. We got to be careful and keep a good eye out. Like it's about to put a 2 up in right now, though. It's trying. Let's look at the 20. What we're doing over here. Okay, this 20 put it in 2 up after all the 1 bars this morning. So it's looking like we're about to break out. Might have to stop out those puts. The opening range breakout did not play out today. Well, it kind of did. If you waited patiently and you waited for this to show you that it was a fail 2 down, and you grabbed the calls instead, you could be up right now. But like I said, if you're in that orb opening range breakout trade, that usually is going to exhaust by 11 o'clock. So be careful. If we're in puts, we want to stop out at the close of this 15-minute candlestick if we're still above this level. I like waiting until closes of candlestick. Some people like taking stop loss as soon as it hits. I don't. I particularly like at least waiting for the candlestick to show confirmation that it's closing above my stop level. Because sometimes you'll get that test, it'll push above, and then it'll reject all the way back down below it within that same candlestick. All right? What happened in the news today? Let's see what else happened on the news. Let's go ahead and share this screen with y'all. Let's refresh this. I think that's from this morning. Trump is in the birthright citizenship case with the Supreme Court right now. I did hear he was going to court for that today. Private sector hiring total 62,000 in March. That's right. We did have some reports drop today. Let's check out the reports that we had come out. That could give you some good insight into where the market wants to lean today as well. Let's look at the reports. Is this Trump speech tonight? What time is that? We got Trump speaking tonight. It looks like that's going to be at 9 o'clock. Oh, great. Retail sales came in a little bit stronger than expected today, so that's a little bit bullish. ISM manufacturing came in a little bit higher than expected today. Okay, so those are good. Let's see what else came out. We had ADP employment. Let me see. This is National Employment Report, tracks monthly changes in the U.S. private sector employment. So the private sector employment was forecasted to go about 40,000 this month and went about 62,000, which is better than expected. So that's bullish. We got some bullish reports coming out. Retail sector control group sales excludes food, auto, and building material and gas. These figures are a key input for government calculation of goods spending. Okay, so people are still spending money on goods at a higher rate than the government expected, or than they expected on this report, at a 0.5% versus 0.3%. If you look at that, that means that people are still spending money on goods and groceries um, outside of food, auto, building material, and gasoline. So that means, I guess it's just those are I would say, what the hell's the word I'm looking for? Non-essentials. There it goes. Yeah, people are still spending money on non-essentials because these are pretty much essential things. Like people need their car, people need building materials when they're building houses, or we need to be buying that if we're building houses. People need to buy gas. People need to buy food. So people are still spending money on non-essentials. That means they're comfortable, and they're not just hoarding and saving money to save all their money for food, gas, and you know, needing a vehicle. So that's a good sign. Retail sales, X auto, about 0.5, about the same. So that's a good sign, like we said. Let me see what else came out. ISM manufacturing report that came out bullish. So this is manufacturing. This is going to show you if there's any response to any change, if any, in the current month for new orders, backlog orders, new export orders, production, supplier, deliveries, inventories, customer inventories, employment, and prices. All right, so this is tracking the manufacturing within the country and the orders that are being placed with the manufacturers. We had crude oil. What is this? Crude oil. Stocks of crude oil to the weekly change of the crude oil supply situation. So it was forecasted to be a 0.8 change, and it came in at 5.4. That's a high change in the stock of crude oil. Let me see what this is actually. Stocks of crude oil. Yeah, so our crude oil supply has increased dramatically compared to what they expected. Does that mean that not as much oil is being used, or is that because it can't come through the Strait of Hormuz? Trump is trying to convince people to come buy oil from us instead, which is a smart business move. I think that's what the ultimate plan is. Oh, look at that beautiful 3-bar we got, y'all. Let's go. Beautiful 3-bar. Uh-oh. Is it starting to rain out here? Oh, man. Might have to cut the stream early due to weather conditions, y'all. I'm outside, and it may start to rain. What the hell's going on here? What is that? Stop playing with me. Let's see if it stops, but Florida rain is tricky like that. So we got a nice 3-bar here on the 15 showing a pivot reversal. Look, rejected right off the level we set, which is why it's good to set and react off of levels, not emotion. Emotion would have been like, oh no, we breaking out. Oh man, to put another 2 up in. Oh, I got to close my put. Wait for the confirmation. Be patient. The money you're going to lose, you're going to lose it anyway. Okay, so if it's an extra $10, $20, let the confirmation come in. If you was wrong, you was going to be wrong. Don't let the pride and ego scare you out of your stop. All right, because that's what it is, really. Like you get to this point and you got so much pride and ego that, like, damn, you know what? I'm gonna cut this loss quick. Then let me try to go in this direction with the push now because I want to be right so bad. But you didn't wait for confirmation, and because you didn't wait for confirmation, you get caught in something like this, and you bought a call right here. And it could get ugly for you coming the rest of the day if we don't get any higher than this level. And you gotta grab the call up here. So let's see what happens with the market. No pride, no ego. Make sure you're listening to the levels and your stop loss thresholds for your account. Don't exceed that. Everybody knows what money they got to trade. Don't try to set your stop loss to be the same as someone else, because they may have a larger portfolio than you, okay? And it does like it's about to start raining out here, y'all. So I'm going to get off the live. I will be back on tomorrow. Make sure you are watching SPY. Remember, we still waiting for this breakdown to occur. We don't want to close above this level right here. We want SPY. I got a lot of other levels for everybody that's in my Discord, but you got to be in the community for that. All right, let me get up out of here. I'll see y'all later on the week. Peace. I'm getting this live.